Good morning, everyone. Thank you so much for joining us all. It is 8 o'clock on the dot, but I think we're going to give a couple more seconds, if you don't mind, while other guests join us. And then I will hand over to Johan Steenkamp, Jolandi Esterhuizen, and Karen Beekman, who I'm sure most of you do know. And we'll just be talking this morning about the March update, which hopefully is coming tomorrow. Well, not tomorrow, but we'll get the content for it tomorrow. But yeah, I'll hand you over, and thanks everyone for joining, and especially so early. Johan, over to you. Thank you.
As soon as my devices decide to play along, there we go. Good morning, everybody. Thank you so much, Lucy, for the introduction. And thank you, everybody, for joining us today. I see we have a vast amount of people that have joined us, so I truly hope that we don't disappoint. Although I do doubt it, since I do have Jolandi to kick us off today. For today, for this particular session, we will focus on the updates for Sage Pastel Payroll, and we would be looking at the compliance leg of it as well. So for compliance, I've got Jolandi Esterhuizen, who's the Global Director of Compliance for Sage. So essentially, she's the Mick Jagger of the compliance world. She's going to start us off with the compliance, and then thereafter, I will take you through what is new for 2026 Update 1. We are 2 minutes past 8. I think we have enough participants to get started with that. So I'm going to hand over to Jolandi now.
Johan, good morning, everyone. Johan, if you will just share the slides, please. And thanks for the introduction. While Johan is sharing the slides, no worries. Welcome to the session, everyone. I realize that we have not as much time this morning. There's a lot to cover, and I know you are very busy. So I'm going to try and run through most of the changes that you can expect from tomorrow's budget speech. Well, yes, very interesting times we're living in. So we really hope that the budget speech will go ahead tomorrow. So it's just basically from a compliance point of view, what to expect, and then also to see what other changes to expect from a system perspective, etc. You will see when Johan shares the slides now that there are two elements of tax changes that we usually incorporate into our systems. And that would be the changes announced in the budget speech, which are typically your rates, etc. So your tax rates, your rebates, your medical tax credits, your ETI brackets, etc. And then there is a second element, and that is what the changes that is basically introduced in the Taxation Laws Amendment Act and the Tax Administration Laws Amendment Act. And those changes were promulgated already, so we're already aware and we're prepared for those changes. What we obviously don't know yet are the tax rates and whether there will be a VAT change, what will the medical tax credits look like, etc. What we do know, which is actually usually announced in the budget speech, is the subsistence rates, the daily allowance or day trip allowance rate, and the travel rate, so the rate per kilometer and the cost scale table to determine a travel allowance. Now that has already been published in a gazette, so that is available. You'll see that I have, if you just move to the next slide, please, Johan. There's a link to the notices on the SARS website. I'm not going to run through this in detail. The only thing that I want to mention on this slide is that the rate per kilometer now decreased effective March, which will basically mean, remember, whatever the employee gets per kilometer, which exceeds the prescribed rate per kilometer, is included in the pay-as-you-earn net. So the employee is taxed on that. Now with the rate per kilometer that decreased, there would be a bigger portion of the excess that is now included in the pay-as-you-earn calculation. So I just wanted to mention that. You can prepare your employees if you do pay more than the prescribed rate per kilometer. You can move to the next slide, please, Johan. Then just minor or technical changes that I do want you to be aware of. You will also see it on all our documentation going out, but I thought it would be maybe beneficial if I quickly just explain what the impact would be. The first one is the remuneration proxy. So the definition of remuneration proxy has been changed. And you'll remember that the remuneration proxy is basically applicable when we calculate certain fringe benefits, for example, bursaries and low cost accommodation, etc. Now, the definition of remuneration proxy has always referred to associated institution when you determine the fringe benefit. And now the legislation was just clarified to say, if you look at an associated institution, you have to look at the definition as defined in the 7 Schedules Act, in other words, the Income Tax Act, and not just the normal sense of the word. So just be aware of that. Then the learnership tax incentive that has been extended to learnership agreements entered into on or before the 1st of April. So that has just been extended. Next slide, please, Joanne. So those are just minor changes. What I actually want to get to is system changes. So what do you expect from a system point of view? Now, the first one, and remember, these changes were all now in the Taxation Laws Amendment Act or the Tax Administration Laws Amendment Act. Now, the savings spot withdrawal benefit, as you know, from September, employees or members of a fund are allowed to withdraw from their savings spot. Now, the legislation has just clarified that if you withdraw that money, it is not subject to UIF and STL. Also remember that this does not apply to a normal employer. It's basically if a fund pays out the amount, because the fund needs to apply for a directive. It's not the employer, but instead, in terms of the Income Tax Act, the fund is seen as an employer. And then that savings withdrawal amount must be reported against Code 3926 in the IP5. The next one is extremely important, ETR monthly remuneration. Now, the legislation has been clarified to say what ETR remuneration should look like. In other words, what amount should we calculate ETR on? So this is important if you do claim ETI or are planning to claim ETI. Now, the definition was clarified, but why I've included this in system changes is just that our systems have already implemented the change that they have now clarified since March 2022. The reason why I've put it on the system changes is you have to go and make sure it's applied correctly, because there will be penalties if you claim or if the ETI amount is not the correct amount that it was calculated on. So go and check your systems. Now, if you just go to the next slide, please, Joanne. If I can just quickly remind you, oh, I see something cut off on the previous slide. So basically, ETI remuneration is your remuneration, either your taxable remuneration, but it doesn't include your cash or non-cash payments. And so that is extremely important. And then your ETI remuneration must be reduced with deductions not allowed as per the BCA. I'm going to quickly explain it again, but you are welcome to refer to notes from March 2022, because that is when we implemented it. But just to make sure that you do check your systems that it's calculated correctly. So initially, and the reason for this change was National Treasury basically said that there were training schemes where the employer would pay a training institution to provide training to an employee, but then they would claim ETI for that employee, even though they don't employ this employee. So it's not an actual employee in terms of the BCA. So let's say, for example, they received a salary theoretically of 6,500. So the employer would show it as 6,500. At the same time, they will deduct 6,500 Rand for training cost. And that gets paid over to the training institution. And this employer would have then typically claimed ETI for that employee. And that is what National Treasury wanted to avoid, to say, if you don't employ this person, you can't claim ETI. So that is why they changed the legislation to say deductions which are not allowed in terms of the BCA should reduce your ETI remuneration. In other words, typically in this scenario, yes, 6,500 salary would be ETI remuneration, but at the same time, because the training cost, that 6,500 isn't necessarily allowed according to the BCA. So 6,500 must reduce the ETI remuneration. So 6,500 minus the 6,500 would get to 0. So in other words, there would be no ETI remuneration. So that was the idea why they changed the legislation to say, if you're deducting anything which is not in terms of law, it must reduce your ETI remuneration. Now, obviously, the systems won't necessarily know what is in terms of the legislation. Yes, there are certain aspects, but if you have a birthday fund or anything else, we won't know if it's in terms of law or not. So our systems have provided for basically where you can indicate as a user what is allowed in terms of the BCA and what is not. So go and make sure that your systems are set up correctly. Also go and make sure that all non-cash elements are excluded from ETI remuneration. Now, usually the system would do that automatically, but there are instances, for example, where the system won't know whether it's non-cash payment, like, for example, travel allowance, where travel allowance can either be reported on code 3701, or it will be reported on code 3701, but a travel allowance in terms of petrol card will also be included in 3701, but then that would be a non-cash benefit. So go and make sure, and again, refer back to the notes from March 2022 if necessary, or ask your questions, and you're welcome to ask questions in the chat. Okay, so that was just ETI. Other important changes, the national minimum wage change. Now, this affects ETI too. So go and make sure that you have processed the minimum wages correctly from the 1st of March. You would have also probably seen that over the weekend, the BCA earnings threshold changed. And that has also been communicated on the different platforms. Now, the one that I actually want to get to, because this is new from March 2025, is refunds or repayments to employers. Now, from March 2025, there's a new tax deduction. Now, just to recap a bit again, if I speak about a tax deduction, it means it reduces your taxable remuneration, or just your remuneration on which your pay-as-you-earn is calculated. So other tax deductions would be a retirement fund or donations. So basically, if I earn a salary of 20,000 and I contribute towards a retirement fund, and my contribution is 2,000, so I won't be taxed on 20,000 salary, but it would be 20,000 minus the 2,000, so I'll be taxed on 18,000. So it reduces my remuneration before pay-as-you-earn is calculated. So from March, there will be a new tax deduction. And that is for where there's a refund or repayment made to an employer. Now, this would typically happen where, for example, I have an employee that goes on maternity leave, and the agreement with the employee is we'll pay you your salary, but then you have to work, for example, another year after returning from maternity leave. If you don't work for another year, then you need to repay me as the employer. Or a retention bonus. I pay you a bonus to still be employed, but if you resign, then you have to pay back the retention bonus. In the insurance industry, it's where these brokers need to repay commission to the employer if one of the policy lapses. So those type of refunds I'm talking about. So previously, the employee had to wait until assessment until they could actually reclaim the tax. So if they paid the money to the employer, then the employer would typically give them a letter to say you've repaid the full amount, and then on assessment, the employee would submit that claim and they would reclaim the tax. But instead of the employee having to wait until the assessment, now it's going to be allowed on the payroll. So if the employee then refunds the employer, that deduction is allowed on the payroll. Now, just on that second bullet, the tax deduction will be limited to the remuneration for the month during which the refund is deducted. Now, obviously, if let's say my salary is 20,000, but the employee needs to pay 30,000. Now it's capped to the remuneration, what I repay. But it's also the tax deduction mainly is cut to the remuneration that I receive in that particular month. And if I don't receive, because I obviously can't deduct 30,000 from a 20,000 to reduce my tax. So any excess in that case, so the 10,000 that I can't claim as a tax deduction in a month, then goes forward to the next month. So any excess gets carried forward if it falls within the same year of assessment in which the refund is paid. Now, at this point, the employer needs to manage this. The repayment and the tax deduction should not exceed the remuneration. And to be honest, there are quite a few aspects that there is still a bit of uncertainty in terms of the application and in terms of the IRP5 code that should be used. We know what the IRP5 code is, but SARS is still just deciding as to exactly what should be reported on that IRP5 code. So there are still uncertain aspects of this change, and we're working closely with SARS as part of the Payroll Authors Group of South Africa. So keep an eye on our communication channels and our release notes, because as we get information, we will communicate this. And it is our current understanding that this does not apply to administrative errors. For example, where I've paid too much, for example, overtime, and now the employee needs to refund this. So this is mainly, let's say, examples like breach of contract, and like the examples I've explained. You want just the next slide, please? So if I can just show you an example quickly. So in this example, the employee received a retention bonus of 3,000 with the condition of completing an additional year of service, but the employee then resigns in the next tax year, and their final month of employment is then in April. So now there's a refund, or the employee now repays the 3,000. So what will typically happen on the payroll? You'll see the employee's salary obviously still stays the same. And it's 20,000 in March, 20,000 in April. On his IRP5, it will reflect as 40,000. The retention bonus, in this year, there's no retention bonus that was paid, but keep in mind that this repayment could be in the same or the prior or the prior year of assessment. So the repayment doesn't necessarily happen in the same year in which the employee received it. So code 4042, I've marked it in red so that you're just aware that we are still confirming exactly with SARS what they want on the IRP5 code, but so far that is the IRP5 code for the refund or the repayment. And the effect that it will have is, if I look at my April figures, my repayment is, so in which I get a tax deduction for, is 3,000. My remuneration for the month, remuneration is still 20,000. Remember, remuneration is before I consider tax deductions. So minus my refund. So my balance of remuneration for the month will be 17,000. And the balance of remuneration is what pay as you earn and STL is calculated on. Also keep in mind that my UIF and ETI and my allowable tax deduction for retirement fund, etc., that gets calculated on remuneration. So it doesn't consider your tax deduction. So you'll see that in April particularly, it would have been calculated on 20,000. Now I know in practice what some employers did was to simply go and reduce. Let's say I received a retention bonus in March, 3605 in March, and April, if the employee had to repay, they might have typically just entered a negative on 3605 or reduced the code 3605. And that would have reduced remuneration. But this is not how we're supposed to do this. So UIF, everything will then calculate on remuneration before we consider the tax deduction. So just make sure that you understand what ETI, UIF, STL, and pay as you earn is calculated on, but this is basically the impact. Now, I had to run through this quickly, and it will also be in the documentation, but keep an eye on the release notes. There will be more detail on the release notes, and then also make sure to attend, if you are able to attend the annual payroll tax webinar that Rob Cooper is presenting, because he will also go into this in more detail and also the other changes. So do you have a better understanding And obviously, again, the other changes. I had to run through this. There are multiple scenarios that we can look at, but for now, I think this is the essence and the core of the change that you just have to be aware of. Again, keep an eye on the channels then, where we communicate as we get information, and also the release notes. But I think from a compliance point of view, that is it. We'll see tomorrow whether there are ETI changes and what the tax impact will be. And then we can determine the impact on each individual going forward. Thanks, Johan. That's it from me.
Thank you so much, Yolandi. I hope everybody enjoyed that. I know everybody was unable to take their eyes off the screen for a minute there, or for 21 minutes there, so I'm going to give you a chance to blink. I did notice a bit of a lag when I was presenting the slides, so I just want to reshare the screen for us. Try and get rid of that ugly little lag. And then whilst I'm busy sharing, I just want to inform everyone, we will be, if we have enough time, we will afford a Q&A at the end. Alternatively, you are very welcome to post any questions you may have in the chat. We will, if we cannot attend or if we cannot speak to those questions during this session, then we will compile a document with answers and we will share it with you after. Okay, let's try this again. So we've heard from Yolandi, we've spoken about the compliance changes. Thank you so much, Yolandi. I know that was a lot of information for a lot of people, and I'm sure that in time this will all sink in, but you'll also recognize the value in the information that Yolandi has shared with us. For my part, I would like to share with you what's happening with the products, the software itself that you're using to pay your payrolls, to process your payrolls. So as you know, we are expecting the budget to happen tomorrow, fingers crossed. And for Sage Pastel Payroll 2026 Update 1 is then expected to be publicly available on the 19th of March. So in essence, 1 week from the budget speech. This, however, is of course pending whatever changes are announced in the budget speech, although I don't think anyone is really anticipating very big surprises. So I'm hopeful and I'm confident that we can stick to those dates. How will you receive the updates? So each update we send through our automated update service, which is essentially a little pop-up that you get in your product when you access the payroll. And it tells you that there's a new update available. If you then opt to download and install, it will go through the necessary steps. Or if you choose to not do it, you can also go and find that update or that install file on our download manager. The download manager, or the link for the download manager, is also available in your help menu within Sage Pastel Payroll. A quick note, I want to encourage you to go and register on the Sage community. It is a platform that we are using. All functions in our business use this platform to communicate important information with customers and business partners. Being registered on the Sage community allows you for two things. Firstly, it gives you a Sage ID for your Sage account. And secondly, it gives you notices or notifications when there are changes that's been posted or key information that's been shared on this platform. Right, so for Sage Pastel Payroll, we had a whole bunch of goodies that we changed, that we updated, enhanced, but there's two specific ones I want to highlight. On the far right, the one that we are all here for is the tax changes for South Africa. It is the reason why this update is so important, and it's also the reason why this is the update with the highest uptake. The majority of our customer base sits in South Africa, practically neighbors. So this is a very important update for us, and it's very important that we get this information right. In addition to that, in the top left, Sage ID has become mandatory as of 1st of March, or sorry, from the March release, let's put it like that. Was intended to be a lot earlier, and then the budget speech postponement happened. I'll explain a little bit more on the Sage mandatory after this slide, but I also just want to make a quick mention of things like the MIPCO, the MISA union rates, the motor health medical aid rates, and the MIPCO calendar that have all been updated. The tax files for the variety of countries up in Upper Africa, all of these have been sent through our tax file system or our MSIs. They are available on the download manager, but 2026 update 1 is where we incorporate them into an install or into an update. All this information will be available afterward as well. But again, if you have any questions, feel free to ask in the chat. A couple of highlights for the African tax files. We did the Mauritius PAYE monthly return. There was the Botswana ITW7A remittance, Mauritius return, the Kenya SHIF, new tax files with updated public holidays for Ghana, Kenya, Mozambique, Nigeria, Rwanda, Sierra Leone, Tanzania, United Arab Emirates, Zambia, and Zimbabwe. It's all being included in this update. The Swaziland ENPF limit has been increased, as well as the Zambia NAPSA ceiling. Kenya, our favorite country, announced tax changes and tax table changes at the end of December that was applicable for the tax year ending December. So those are now included in the update as well, and not just on the tax file. Namibia social security contributions have been increased. The Kenya NSSF has been updated, and the Namibia tax files with updated public holidays and possible tax changes. We're not entirely sure what's happening there yet. Some other software changes that we have incorporated or included. We've reviewed the messages that appear to customers. So a typical example is when you update to an update 1 with new tax files, you get a little message to say you need to run a legislative release. That is a message that appears to our customers. But in addition, we also have things that remind you of EVS if you have not signed up, or that prompt you to log in with a Sage ID, like I'll explain a little bit later. There's a variety of messages that appear through Sage Pastel Payroll, depending on where you are in the system and what you have included or what you are using. So what we've done for this update is we've revised those to say, are these still relevant? Does it make sense to have these messages in the particular places? And also, are we starting to look a little bit like a website with commercials on it? So those have been revised, and hopefully it will be a slightly better customer experience. The MIPCO MISA union rates have been updated. Oh, I've mentioned that before. I'm sorry. We found a spelling mistake on the company setup assistance 25 years later. The new MIPCO calendar, and there have been new validations that have been implemented for the UIF registration number. So I'm sorry if you are registering your UIF with a bunch of zeros, that will unfortunately no longer be accepted. So the Sage ID, Sage accounts, why is it mandatory? How is it going to look? So once you install 2026 update 1, you will be prompted with a little note, a little message. One of those messages we revised specifically, or the reason why we revised all the messages. When logging in, you will be prompted with a message to say that you have 30 days to sign up for a Sage ID, or if you already have a Sage ID, to sign in using your existing credentials. Two options. You can either remind me later, which will close the message until the next time you log in, or you can click on the Get Started, which will take you to the Sage ID screen to log in. Now, the Sage ID screen, for those that have Sage ID credentials, you will notice this looks exactly the same as everywhere else. It's because we are using the same global standard and the same global Sage account as everywhere else as well, including the Sage community. If you do not have an email address already set up, you can simply click Continue, and it will take you to a section where you can set up an account, where you can create an account. Now, this will continue for 30 days. And each day or each time that you log in, you will be prompted how many more days you have remaining, up until you get to your last day. Then you will no longer be prompted. It will simply give you a message to state that you cannot proceed until you have entered or signed up for a Sage ID. And your only option available then is to go into a view-only mode. Right. So why have we done this? Sage ID was introduced a number of years back, and as part of the Sage strategy to be, sorry, I keep getting distracted with people joining the call. As part of the Sage strategy to be a global leader and to be more cloud immersive, Sage ID is one of the key tools that we use in order to connect our customers, whether it be to the Sage community, whether it be to an entitlement service, registrations, whatever the case may be. So Sage ID enables us, even as a desktop product, to incorporate more user-friendly and more, and a better user experience for all of our customers. A couple of things to note. Each company requires a Sage ID. If you have the same Sage ID on multiple companies, you can use the same one. We don't encourage that you share Sage ID credentials. Typical scenario is if you use admin@abc.com, the person that is responsible for that admin account, when they leave, you are stuck with a situation where you can't redo it, where you can't fix that. Sage ID for Sage Pastel Payroll will not require multi-factor authentication. If you have set up a Sage ID in the past and you have created or you have opted to use multi-factor authentication, then you are very welcome to proceed with that, but you will not be required to set up multi-factor authentication when creating your Sage ID through Sage Pastel Payroll. This is only applicable to users in South Africa, companies in South Africa. The purpose of that, or the reason for that, is quite simple. We're just trying to stagger our approach. And lastly, your Sage ID will remain signed in for at least 12 months. So unless you change computers or your server crashes or whatever the case may be, anything that forces you to install Sage Pastel Payroll on a new computer, you will not need to remember your password or re-enter your password for a 12-month period. That is all from me. We have more than enough time for Q&A, I feel. And I see, Carla, you have your hand raised already. Would you like to unmute your mic and ask your question? Lucy, are our participants able to unmute their mics?
I think I've just unmuted Carla. She should be able to speak now. Yeah, Carla, if you want to unmute your side, it should work. There we go.
Hi. Hi there.
Hi.
Yes, regarding the Sage ID, I registered a while back and it's becoming so frustrating for me because literally 2 to 3 times every hour, this little thing pops up and says, please log on and da-da-da and da-da-da. And I go and I log in and I don't know what I'm supposed to do. And I've called Sage twice now to assist why this pop-up screen keeps coming up literally 2 to 3 times every hour. It is so frustrating.
That is interesting and definitely not the way it should work. Is this on Sage Pastel Payroll that it's popping up every 2 to 3 hours?
That's what they're saying it is linked to, because I've got Sage Payroll and I've got Sage Partner on the same PC. Two ladies have tried to assist me, but it continuously. It's already come up twice this morning. And I don't know what to do. It's so frustrating.
I have the
Carla.
answer, Carla. You need a holiday. I think that's the
Thanks.
that is the answer.
Don't take a holiday before tomorrow, though. Don't want to miss out on that.
Carla, will you just pop your contact details in the chat for me, and then we'll get someone to contact you, or we'll look into it and then get back to you. I think might be the easiest thing to do.
Okay,
Yeah, no,
that will be
absolutely.
great.
I absolutely agree. I mean, this is not something that should happen. I almost want to go out on a limb and say it probably won't happen after the March updates, since we have redesigned it a little bit, but I definitely can't confirm that. So I would like to look into it, and I'd like to have somebody contact you so we can gather a little bit more information and see that this is something that we have in fact catered for.
Fabulous. Thank you.
Oh, I see quite a few people. Same problem on my side, same problem, same here. You've reached your recording plan. Okay, that's not me. Same problem, same problem. Okay, for the slides to us. Yes, Hanneke, I will, the slides will be available. So Carla, to finish off the conversation with you quickly, yes, thank you for your contact details. I will make sure that somebody gets in touch with you, and that we can investigate this a little bit further for everybody else that is experiencing a similar problem. I'm trying to think what would be the easiest way to manage this. Right, so what I'm going to do is I'm going to drop my email address in the chat as well. If you're experiencing the same problem, please drop me a mail. I will compile a list of everybody that has stated that they have a similar problem, and I will see how we can drive this as a project. Kathy, you said we have a large number of companies. Are we expected to log into all of them instead of only the one we are currently working on? Yes. So initially, you would be prompted to enter your Sage ID for all of your companies. Where you have the same user for multiple companies, it will transpose, what's the right term, through to those companies as well. So for example, if you use admin 123 on company A as well as admin 123 with the same email address and same credentials, it will go through to those companies as well. If you have different credentials for each company, you would need to enter your Sage ID individually for each of those companies. Again, it's only initially. Thereafter, your token is valid for 12 months. So you will not need to re-enter your credentials every time that you log in, unless you move PCs. Same issue. It's starting to make me sweat a little bit.
I think it's just because we gave Carla permission to just take 2 months leave. So I think that's the excuse. They're all now joining into the problem.
Yes, everybody now needs 2 months leave.
Exactly.
Yeah, and I'm surprised you haven't loosened your tie yet, actually. You're sitting there very, very well put together. Okay, I don't see anything other than that coming through. So if anyone, this chat will stay open, I think, for a few more minutes if you wanted to post your questions in there.
Yes. So I think the chat will remain open until 9 o'clock. The call was posted from 8 to 9. So you're welcome to post your well, I think actually, Lucy, if I remember correctly, it's a few minutes after the end of the call.
Yeah.
So if you have any other questions, feel free to put them on there.
And Johan, you'll just pop your
There's a
email address in here.
question.
Hey?
Yes, I will. I will put my email address. Thank you, Wendy, for alerting me to the Q&A. There is a question on the Q&A. And I'm sure I'll be able to see it soon.
Can you see them, or shall I read them out for you?
I can't see them. Would you
Okay.
mind reading them out, please?
Yeah, with pleasure. So they're quite a couple. Sorry, thanks, Wendy, for sharing this. We'll go straight to Nadine. Yes, absolutely. We will share the slides on the recording. Chantal is asking, can we do year-end rollover before updating to the latest version? Our payroll runs on the 19th of the month. Do I run payroll based on old version to prevent paying staff late? So I think, Yolandi, that may sit with you or with both of you. I'm not sure.
Yolandi, would you like to take this one first? I have a few comments.
No, you can go for it. I think it relates to the system, whether it will backdate, will it have an impact on whether you do processing before loading the update. So I think it's falls within your expertise, Johan.
All right, thank you. So I think it was Nadine, right? Nadine, I'm not sure. Somebody asked that. Yes, you can. There are certain things that you need to consider, though, when doing that. A typical example of a customer or a company that would need to do that is somebody that pays weekly employees. And it's a relatively standard procedure, I almost want to say, for them to process the first week on the old tax tables. What happens is when you roll over to your next period, whether it's weekly, fortnightly, or monthly, the tax is then adjusted according to your year-to-date values, as long as you have not changed your system to only look at periodic tax. If you're using your annualized tax like the system is normally set up as, and like we prefer in South Africa, then the tax would, I almost want to say, auto-correct itself over the next period or two. What you also need to consider is that there is an inherent risk with that. If your employee resigns at the end of March, the tax would not have sufficient time to correct. So as a result, when they submit their tax return at the end of the year, there would be a slight discrepancy. Again, it would just mean that they either need to pay in a few rand or claim back a few rand from themselves. There's no jail time involved here. So yes, you absolutely can. If you need to follow your due process, by all means, go ahead and do so. The tax will correct itself once you have installed the new version. It is, however, advised that if you are able to wait until the tax files are out, it would be a better option. You negate a lot of the risk that's involved. So yes, there's a few things to consider. Think about your scenarios and how it could possibly affect each scenario, and then make a decision from there.
Thanks, Johan. I think we had a similar question from, I think it's finance at Erica Primer. Sorry, I can't pick up your actual name, but it was the same. I need to process payroll on the 19th. Do I wait for the 2026 update? So I think that is asked and answered.
Correct.
We've got a quick question here from Naleen. How do I deactivate the birthday, anniversary, pop-ups, etc. on my PC?
Naleen, I'm gonna have to get back to you on that one. I haven't done that in such a long time. I can't honestly remember. I think if I remember correctly, on your task manager, or sorry, on your taskbar at the bottom in the right, little arrow, it gives you a portion where you can go on to your Sage connected services, and there you can choose what needs to appear and what does not need to appear, or what should not appear. and you can deactivate your it's not called birthday anniversary, I think it's called reminders. You can deactivate your reminders on there.
Thanks, Johan. Creation has asked, is employment verification mandatory for now?
No, absolutely not. It is advised. I'm a very big fan of employment verification services. It is an absolute game changer in the way that we do financing in South Africa and globally. This is not a South African only initiative. This is a global initiative that was in fact piloted in South Africa many, many years back. And even then we saw a vast amount of benefits to having this type of direct link with financial institutions. Whether it be the reduction in payslip fraud or identity theft, or there was just this oodles and oodles of benefits. So while I do absolutely promote employment verification, it is not mandatory. You have the option in your company setup to go and unselect EVS. You have the option to keep your company on, but unselect certain individuals on the employee maintenance screen. So you have some options. If you are able to participate, you would essentially help in two main factors. One, making it easier for your employees and making it safer for your employees to apply for finance, whether it's a personal loan or home loan or anything in between. That's number one. And number two, you would also help cement this in the South African financial sector and to progress it and to help with a more streamlined process. So yeah, absolutely promote it. Definitely not mandatory.
Thanks, Jan. There's a quick question here from Nadia asking what is employment verification. So I'm not sure if you can just give a very high level response to that. And then I see we've got one more question. Thank you.
Okay, so it's 13 minutes to 9. I'll take 3 minutes to explain employment verification and we've got 10 minutes left. So employment verification is an initiative that we've introduced for Sage Pastel Payroll that allows your employees, when they go and apply for finance at any financial institution that partakes in the EVS process, like for example, let's use Westbank as an example. Your employee goes to Westbank, and typically in the past what they would do, they would take 3 months bank statements, they would take 3 months pay slips, and that's if they don't earn commission. If they earn commission, they need to take 6 months pay slips. What the bank would then do is they would compare the two to check that it matches, number one, and also do a feasibility calculation to see whether you can afford to buy this Lamborghini. What employment verification basically does is it cuts away the paperwork. So instead of your employee needing to come to your HR department or your HR lady and say, may I please have 3 or 6 months pay slips, and next month do the exact same thing because their first loan got declined. Now at the financial institution, the representative will ask them for permission or consent. They will sign or tick a box to say that they consent to sharing their employment and payslip information with this particular institution for this particular application. What then happens is Westbank's back-end system talks to the Sage back-end system and confirms that employees' dates of engagement, years of service, net salary, fringe benefits, whatever they need in order to ensure that the employee, they can do a feasibility calculation and that the information that the employees provided is in fact correct. That information is shared directly through the security measures within Sage, which, by the way, is stronger than ISO, is shared directly with the bank. So there's no paper trail. There's nothing that gets mixed up in between. To cement it even further, the banks have started talking to each other in a similar fashion about 6 years ago, I think. So you're not even asked to bring bank statements anymore. Even if you bank with ABSA, if you apply at Westbank for car financing, Westbank will ask ABSA directly for your bank statement information. Now the same is happening with payslips and employment. So this is a way that we are able to fast track any type of application. It's a way that we are able to streamline those applications, and it's a way that we are able to secure the information that goes from your payroll up to the bank. Now, perhaps just worth noting, none of the information is shared without that consent being given. So your employees are in full control of the information that is being shared with a third party. Without that consent, nothing gets sent back and forth. Right. I hope that's explained it. Lucy, you said there was one last question.
Yeah, there is, and I hope I'm doing it justice by asking it right. Hi, Johan, regarding dealer package for data fixes, etc. When we open a client DB, do we enter the client's ID and password or our internal partner ID? Even once done and company is removed, the Sage ID pops up to log in months after the fix. Okay, this might well be our little pop-up problem, but there were some bigger words in there that perhaps you can respond to.
That's a very good point. I don't know if Karen's still on the call, and she can perhaps just correct me if I'm busy lying to everyone. But similarly to how we don't promote sharing Sage ID credentials, we would also prefer that you use the customer's credentials to log in on that company. At this point, that company is simply linked to the employees or to the user's Sage account. In future, we'd want to expand that further. We'd like to introduce other functionality that we could potentially enhance the user experience. Or streamline the way that customers do registrations. You don't have to phone in for registration code. Over the years, we've done something similar, and we've, to a large degree, perfected that process. But with any kind of process, you get into a point where you can't progress any further. And Sage ID will help us to take the next leap forward. So yes, absolutely prefer to use the customer ID to link their company accounts or their company database to their Sage accounts.
Brilliant, thanks, Johan.
I think are those the last questions?
Yeah, that's definitely
Fantastic.
us. There are one or two things that I think what we'll do is just compile what's being asked, a couple of just easy high-level answers, and we'll share that when we share the recording.
100%.
Okay. Brilliant.
Thank you
we
so much,
are
Lucy.
spot on time.
Lucy, thank you so much for driving this. I really appreciate this. Thank you so much for setting it up. You are an absolute rock star.
With
Everybody
pleasure.
that attended, thank you so much for taking the time. I know it's early on a Tuesday morning, the day before budget. Everybody's relatively nervous and already have the whiskey out, but I promise you it's not that bad. Yolandi, thank you for your contribution to the compliance, for speaking to the compliance. It's always very nice to have you part of these sessions. Thank you, everybody.
Thanks, everyone. Have a great day.